Welcome back to the deep dive. Today we're getting into the hidden infrastructure that makes the entire retail and, well, the whole digital economy actually function.
Mhm.
We're talking merchant payments, point of sale systems, and the crazy fast pace of the global PayTech revolution.
It really is dizzying.
Our mission today is pretty straightforward. We want to give you the shortcut to being genuinely clued in on the financial foundation of how we all buy things now.
Yeah, how businesses, whether it's a huge e-commerce site or just your local coffee shop, actually accept and manage money in this digital age.
Right. We're going to extract the essential knowledge.
And this is so much more than just, talking about card readers. This whole system, PayTech, it's like the central nervous system for pretty much every financial innovation that's happening right now.
Okay, so before we start looking at the map, we need to get the definitions straight.
For sure.
Let's nail those down. When we say merchant payments, what are we really talking about?
Merchant payments are just the financial pathways businesses use to get money from customers. Could be online, in a store, in an app, doesn't matter.
Got it. And the place where that happens, the physical or digital spot?
That's the point of sale or POS system. It used to be that big clunky cash register.
Yeah.
But today it's this really sophisticated mix of hardware, software, and the payment plumbing underneath. It doesn't just take your money, it tracks inventory, manages customer data, everything.
And the last one, PayTech.
That's the big umbrella term.
Mhm.
It covers all the tech that's making payments faster, cheaper, safer, and out. This is the key part. Deeply integrated into everything else a business does. It's the engine driving us away from physical cash.
Okay, so let's unpack that transformation. What's so fascinating to me is how different parts of the world solve this puzzle in completely different ways.
Exactly. What Silicon Valley built is nothing like what emerged in Bangalore or Nairobi.
Why is that?
It all depends on what was there before. Did they build on top of an existing banking system, or did they have to invent a totally new one because, not many people had bank accounts?
Let's start with Western markets then, say the United States.
Yeah.
For years, the U.S. was actually lagging, wasn't it? Relying on those old mag stripe cards.
Oh, massively. It was a huge security vulnerability. But that lag, it triggered a huge shift. Now, the standard is all about EMV chip cards. That's Europay, MasterCard, and Visa.
A huge leap in security.
A massive leap. And of course, we've seen this rapid growth in contactless mobile wallets, and now you're even starting to see QR codes popping up more.
But the real story in the U.S., I think, and maybe globally, is how a couple of companies just blew up the old model for small businesses. I'm talking about Square and Stripe.
Absolutely. Square just completely democratized payment acceptance. I mean, before Square, if you were a tiny merchant, say, at a farmer's market,
Yeah, good luck.
the setup was a nightmare. Expensive hardware, monthly minimums. It was prohibitive.
So how did Square break that?
They used what everyone already had, a smartphone. They made these simple, cheap little readers, and, crucially, they offered one simple blended rate, a percentage per swipe, but no monthly fees.
So it made card acceptance accessible to literally anyone.
It was pure disruption. Suddenly, the barrier to entry went from hundreds of dollars in a complex contract to buying a $10 dongle.
And while Square was tackling the physical world, Stripe went after the online universe.
Right, purely software. Stripe gave developers these really clean APIs that made putting payments into a website or an app as simple as just dropping in a few lines of code.
They standardized all the hard stuff.
Exactly. Subscription billing, marketplace payouts, all of it. The key insight for both of them was turning payments from just a financial service into a tech tool for managing your whole business.
Okay, now let's shift over to the UK. We see a different kind of leadership there, especially with contactless and bananas. Really interesting regulatory push called open banking.
The UK is a beast when it comes to contactless. The infrastructure is just so robust. And you have companies like SumUp and Zettle doing a similar thing to Square with these portable terminals for small businesses.
But the real game changer seems to be open banking. Why should a merchant even care about that?
Because it gives them a way out of the expensive card network fees. Open banking basically forces banks to let approved third parties initiate account-to-account payments.
So directly from the customer's bank to the merchant's bank.
Mm-hmm.
Okay, that sounds a bit technical. Why is that revolutionary for a merchant?
Because you bypass the card schemes, you bypass Visa, you bypass MasterCard. When you do that, you get rid of all the interchange fees and scheme fees that go with them.
Which are the biggest part of the cost.
Usually, yeah. So instead of paying, say, 1.5 to 3% on a card transaction, an A2A payment might just be a tiny flat fee. It's a massive deal for profitability.
Okay, this is where it gets really interesting for me. Looking at Asia, where they didn't wait around for chip cards,
No.
they leaped straight into mobile solutions.
India's transformation is maybe one of the most incredible examples of this anywhere in the world. It was powered by something called UPI.
The unified payment rail. How is that different from, say, Visa?
Well, think of UPI less like a company and more like a public utility for money. It's instant. It works with any bank, and it allows money to move between accounts using just a mobile number.
And that's the foundation for all the QR code payments.
That's the foundation. It means the smallest possible vendor, the person selling tea on a street corner, can accept digital payments with zero cost.
No expensive hardware.
No hardware at all. They just print out a QR code. And this was all possible because of India's broader digital public infrastructure, especially eKYC, electronic Know Your Customer,
Which lets them sign up merchants instantly.
instantly, using their digital identity. No paperwork, no friction. Apps like PhonePe and Paytm can onboard millions of merchants this way. And they don't just stop at payments.
Right, they start offering other services.
Precisely. If you can see a merchant's daily sales through UPI, you can accurately assess their risk for a small business loan. It builds a whole ecosystem.
Now, moving over to China,
Mm-hmm.
I mean, that's maybe the most advanced mobile payment landscape there is,
Yep.
totally dominated by super apps.
China is basically cashless in its big cities. It's all Alipay and WeChat Pay, and it's all QR codes and in-app payments for everything. Not just goods, but utility bills, train tickets, you name it.
And for a merchant, what does that ecosystem feel like?
It means payment is just one small part of their digital world. They use that same super app to talk to customers, run marketing campaigns, and this is critical, get real-time payment confirmation.
So the money is there instantly.
Instantly, which is a huge deal for cash flow compared to waiting a day or two for a card payment to clear. Plus, these platforms have a massive cross-border reach, so Chinese tourists can use their wallets abroad, which is great for global merchants.
Okay, one more stop in Asia. Singapore.
Hmm.
Their strategy feels more about structured interoperability.
Exactly. Singapore's focus was on making it dead simple for the customer. Merchants can take cards, wallets, real-time bank transfers through PayNow. But the genius move was the SGQR standard,
The single QR
the
code.
single QR code. Instead of a merchant having this ugly mess of 10 different QR stickers on their counter,
Yeah, you see that
they
sometimes.
just have one, the
Yeah.
SGQR sticker. The customer scans it, and their own phone and preferred app figures out the rest. It just works.
That's brilliant. It reduces all the confusion.
And it ensures every merchant can accept every major payment type with almost no effort.
So if we connect all these dots globally, it seems like PayTech's success really depends on adapting to whatever the local situation is.
It's all about local behavior and often infrastructure gaps.
And nowhere is that clearer than in Africa, right? The mobile money ecosystems there had to solve financial inclusion first.
That's right. In a lot of African countries, you don't have a lot of bank branches, but mobile phone penetration is incredibly high. So mobile money, especially M-Pesa from Kenya, just took over.
And it bypasses the need for a bank account completely.
Completely. A merchant just registers their mobile number, and that number becomes their digital wallet. A customer pays by sending money directly to that number.
So a farmer selling crops can get paid digitally.
Exactly. They can participate in the digital economy, store their money safely, and build a transaction history that could eventually get them a real loan. It's a massive engine for financial inclusion.
We're seeing explosive growth in Latin America too, but that seems to be fueled more by things like Brazil's Pix.
Pix in Brazil it's just transformative. It's an instant payment system launched by their central bank. It's free for people, super low cost for merchants, and it works 204/7 through QR codes.
So it's immediately a huge competitor to the card networks.
A massive one. And you also have these specialized PayTech firms like Mercado Pago and Nubank building these integrated platforms that combine payments with other essentials, like installment plans for customers or cash advances for merchants. It's a whole ecosystem around the transaction.
Okay, this all sounds incredibly streamlined, but we can't really talk about merchant payments without getting into the mechanics.
Yeah.
I mean, if you're a merchant, you care about two things: cost and time. So how does the money actually move, and what makes one system cheaper than another?
This is the critical part to understand. In the classic card-based acquiring model, your Visa or MasterCard payment, the cost is actually made up of three main parts.
Okay, let's break them down.
First, the biggest piece is the interchange fee. This is a fee paid by the merchant's bank to the customer's bank.
So the bank that issued my credit card gets a cut of my purchase.
Precisely. You can think of it as compensation for the risk and cost of issuing that card and providing the credit.
Okay, what's second?
Second are the scheme fees. These are the small tolls you pay directly to the card networks, to Visa or MasterCard, just for using their rails, their brand, their technology.
And third?
Third is the acquiring margin. That's what the merchant's own bank or payment processor, like a Stripe or a Square, charges for their service.
So with every tap of a card, the money's getting split between a bunch of different parties.
Exactly. And that is why systems like UPI in India or A2A payments in the UK are so disruptive. They remove the card network from the equation entirely.
Which removes their fees.
It removes their fees, and it enables a direct transfer with much lower costs and, crucially, instant settlement. Getting your money now instead of waiting 24 or 48 hours is a massive advantage for a small business's cash flow.
You know, what really stands out here is that the POS system has evolved so much. It's not just a cash register anymore. It's not just processing these fees. It feels like it's moved from being a simple tool to a strategic asset.
The POS is the true digital hub of a modern business. Its strategic role is all about data. It's not stuck on the counter anymore. It's cloud-based software that connects your sales data, your customer profiles, your employee schedules, your inventory.
So it enables that true omni-channel commerce experience.
It does. It means a merchant can see that you looked at a shirt on their website, came into the store to try it on, bought it, and then got a loyalty coupon sent to your email. All that data is linked. That's essential when you're selling across stores, apps, and social media all at once.
So looking forward, what are the tech trends that are going to define the next few years of PayTech?
I think the future is about radical interoperability and making physical terminals obsolete for a lot of smaller merchants. The biggest trend right now is soft POS technology.
Right. Break down soft POS for us one more time.
Soft POS is software that turns a normal, off-the-shelf smartphone into a payment terminal.
So no dongle, no separate machine.
Nothing. A customer just taps their contactless card or their mobile wallet directly onto the back of the merchant's phone, and the payment goes through.
That basically eliminates the biggest barrier for the smallest vendors, the cost of the hardware.
Completely. It's going to accelerate digital acceptance everywhere. And coupled with that, you have the deeper integration of AI. AI is moving beyond just showing you past sales. It's becoming predictive.
What does that look like in practice?
Imagine your POS system looking at sales data, the weather forecast, a local event calendar, and automatically adjusting its demand forecast. It could trigger an inventory reorder before the shop owner even knows they're running low.
Wow.
And alongside that, you'll just see better security through things like tokenization and biometrics and even faster merchant onboarding like we saw in India as digital identity becomes more robust.
So if we pull this all together, from the US platforms to the UK's open banking, India's UPI, China's super apps, the conclusion seems pretty clear.
It is. Despite all the regional differences, the direction of innovation is totally consistent. Payments are becoming more digital, more data-driven, more invisible, and just seamlessly integrated into the commerce experience.
Which is why understanding these systems is so essential. They're not some back-office process anymore. They are the frontline engagement tool. They're the engine of the global digital economy. But I do have one final thought for you to think about as you process all this. If soft POS technology makes dedicated payment hardware obsolete, I mean, if anyone with a standard phone can become a full-service payment acceptor, what happens to the multi-billion-dollar companies built entirely on manufacturing and selling those physical POS terminals and card readers? What new business models are going to emerge from a world of truly software-only acceptance? Thank you for joining us for this deep dive into PayTech and the revolution of the modern POS. We'll see you next time.